Hello everyone, welcome to the Candle Mind YouTube channel. My name is Sina Shadian and I'm going to show you how to trade with the pure price action, which I think plays a significant role in the markets. And I believe each candle has a story to tell us. So let's just dive in to the Euro USD chart, and as you can see here, today is a trending trading range day on the 6th of May 2025, and last night we had a parabolic move downside to the open of the wick, which is always this vertical red line. And I also opened the beginning of the day of the first candle of the week with a rectangle, so because it plays a significant place, and I always consider this as an edge to the market. And whenever it just the price goes down or up to this level, I always look for pattern to see whether there are possible trades to take on or not. So let's just dive into it. As you can see, today was a trending trading range day. So let's just talk about the first hours of the market, which began during the Asian market. And here, after the market touches the open of the wick, it rallies up, then it starts consolidating and forming in a small trading range, and it finally breaks in the middle of the night. So a lot of traders might have gone short here below this candle and put their stop loss above this level. And as you can see here, they have formed series of bearish candles. Then it starts to form a small trading range, and after this trading range, just the whole story begins. What is the story that I'm going to tell you exactly here is that whenever market forms a trading range, the price has to break from a level, and here, as you can see, it has broken from upside and it has filled this series of bearish candles, which I call them a gap. So it has absolutely covered this gap with this rally, and then it starts forming a channel. So a lot of people I have seen, usually they, for example, draw their channel lines something like this, but most of the time they don't work and get frustrated, and they never know why is that. The reason is that when the market is in the spike phase or a big rally, it means lots of people are buying in the market. So that's why this big candles start. It has just come out from this range and it is starting its move. So when it is rallying upside or downside with big candles, small shadows, and each candle closing on its high, just you have to look for buying opportunities. That's when the story begins. And the amazing part here is that I never wait for the market to just make big corrections, and I instantly just start putting my buy orders under each red candles, which is a correction. So I'm going to buy here, I'm going to buy here, and I'm going to buy here. And all in all, as we all know, this is a bullish flag, which price finally breaks it from above, comes down, so it starts moving up again. So when you are buying here, make sure that you are at least buying a small amount of with your leverage, and put your stop loss down here. Let me just show you how it works. So below this red candle, I'm going to put my buy limit and put my stop right down here in the beginning of the move. Some people put their stop losses here. You can do it as well. As you can see here, there are 1, 2, 3, 4 for spike, for bullish candle, which all in all they play as a role. We call it spike, and then it creates just a flag, breaks it up, comes down, and starts its move with a high to buy setup, which we are going to talk about it later in the other videos. So this is also another buy signal to me, and here you can see clearly the 20 exponential moving average gap bar. The price even can't touch it. Just once it has touched it, and no candle even closing below it. So it means there is something wrong with the bear case, and it shows the strength of the buyers. That's why you don't have to sell it. Never. If you want to make money, this is not the way. Never fight against strong trends. That's why I always just look for buying opportunities. All right. After the spike phase, the price enters into a channel. As you can see, one move. First move is first move after the correction starts to form a channel. So this is the first move, leg one, the first move, the second move, then another correction, and this is the third move right here. Okay, so what happens here? Let me tell you something about the channels. Channels, after the spike phase, channels usually end. You might think, or you might have been so frustrated with not knowing when the channels are going to finish. And when you see such bullish candles, you're going to be excited about, oh my god, it's going to just break the channel. I'm going long and put my stop loss, for example, here, going to make a lot of money. Then see what happens. It just corrects deeply down into the beginning of the trend line, and then rallies up again and comes down. Let me tell you something. When you see a channel again forming after a spike, you should always wait for the third touch. Usually the market, and what are the best signals to take when the market breaks a channel? You should be patiently waiting and take the second signal. If you see here, it just breaks the channel from above, comes down, and then it goes up again, forming a double top. And I always take the second one as the best signal. So I would enter just below this candle and then go low, looking for at least two legs correction, downward to sideways. And if you see here, a very deep correction has happened, and it usually breaks from the downside of the channel. So a lot of people might just look here for, and then they see, oh my god, this is a pin bar, I'm going long. But this doesn't work, and this only shows that a lot of people are just getting out of the market. Lots of people have gone up long here. That's why they have created this pin bar, or I don't know, whatever you call it. I just call it pin bar. This pin bar, and the smart traders know that this is the end. That's why this bearish candle forms after it, and buyers can't even go one tick above this candle to trigger their orders. Then this, you see, happens. Market comes down. But you might think, when a channel breaks down, where is the first place to just hold it as a support level. Let me tell you something. The best level to look for the market to be to play as a support level is the beginning of your channel. Okay, so a lot of people see this as a double bottom, um, which I'm not an exception here. So if you see after it just corrects, after this signal corrects down, it just touches the bottom of the channel, which plays as a double bottom, then you can just go long here, which is a little aggressive. I usually wait for more clear signals to see whether this level plays appropriately enough or not. Then look for other ways to go long. So a small rally, but not ideal because there are a lot of overlap with shadows. So and then goes up again, but this one is plays clearly a good signal bar for me, so I'm going to go long here. However, sometimes when a channel breaks, the place where it has been broken, also a lot of people go short here, but I think this worth taking it. So I would go long here until it touches the top of the day, which is here. And if you see, when it touches the top of the day, let me just draw this line, or better showing it with a rectangle to show it has been touched. What has happened here is that the market has formed another channel here. You see it clearly here. And what to just clarify what I have told you earlier, this point is that whenever market is in a channel, you should always wait patiently for a failed breakout, which you can see this big shadow here. The market has gone up, rallied down, then it goes up and down, and this is the second signal, as I have told you earlier, this is the best signal to put on a trade, in which if I were in the market, I would easily just put my stop loss here above this bearish candle and put my sell order here to go short. And if you see 1-to-1 risk to reward ratio and nearly 1 to 1.5 risk to reward ratio for staking. And if you see, it has clearly also touched the bottom, and also we said when it just breaks out of a level which can make it, clearly it usually comes down to the bottom of the channel, it just plunges a little into it, and you should see whether it is going to go down or it's going to continue its way off, which most of the time, maybe 60% of the time, it just breaks down below and corrects to the beginning of the channel, which is here, creates another double bottom, just like the case we had here, and then it starts going up. However, this breakout failed, it starts rally up again, and whenever this happens, it's worth just looking for two more legs. So here we have the first leg up and the second leg. Okay, so, and as you can see here today, which was a trending trading range, these were all possible trades that you could have taken. So the first one was here if you were in the market, or awake and being presented in the market, and the second one was this one, which is the first 20 bar gap bar moving average. You could buy it here because market clearly was in an uptrend, and you should have waited patiently to just market break and make it and see whether it is successful or not, then take it the second signal downside. And the next one was here to take it and I said this candle is better to put on a trade, okay, and either this one, because clearly I can see a double bottom here, okay, then it starts creating a channel, again a failed breakout, just like here, the second signal to take it down here, and looking for two legs down for correction. The first leg clearly, the second leg which is um, which is um, which is which has formed based on two smaller legs, and then it hasn't been able to just clearly break it. So perfect candle to see that it goes down, it fails, goes up again, closes into the channel, and goes even more aggressive to the top of the day, and then just see how it has just corrected itself. But what I have seen today, I see generally this trading range days very powerful. That's why I hardly ever look forward for taking um, any short. That's why you see just a couple of 5 minute bars ago I have taken this long, and I'm waiting patiently for the market to reach to this level. So these are my buy orders. The in fact the lower low, and now because it has broken this level and has come down and up again, now I can just put my stops below the most recent low level, which is just this one. And if market once again, so in this way I can just manage my trades, and if market just breaks this level again, and the candle breaks above here and just solidify itself, I'm going to just put my stop losses just below this recent low. So it's nearly end of the market for this day, but most traders say it doesn't worth taking such trades, but I don't personally believe into the, I don't know, market makers or stuff like this that usually people talk about. I believe if you just could easily read the markets, it is going to just present itself to you as a just a wide ocean to just hunt what you need to eat. So we are hunters. Goodbye for today. See you tomorrow.